Uh, Welcome to Subramani. Where do multimillionaires really invest their money? I've always struggled asking myself this question. So I said, let me do a small dipstick survey among the rich friends and my ex-neighbors of Ghatkopar, and I said I will speak to a few of them. And I realized that on an average they have upwards of 70-75% in equities. Of course, the builders there keep a lot of stock in trade, and they tell you, oh, that house is an investment. But then you ask them after 2 years or 3 years, they say, no, that house, so I got a good price, so I sold it off. So for me to make a distinction between their stock in trade and their investment is very difficult. So they also bluff to tell you that, oh, markets are booming in real estate. Sometimes they bluff, sometimes they tell you the truth. So without getting into all that, something like 70-75% of their money is in equities. Now, as a technical theoretician, you also want to know, does that asset allocation change with age? To me, I don't find any change, because largely these families live together. So there is a father and say 2-3 sons or 2 sons. The daughter is married off, so there are 3 children, or there are 4 children, or maybe there is just 1 child or 2 children. So largely what happens is, as the portfolio ages, the value of equity keeps going up. So they may have started off with 50% in equity, but over 30 years, what has happened, the value of the house has gone up, but it has not gone up so much. So their net worth has gone up largely because of equity, and all the incremental money has gone into equity, right? So what has happened is, the weightage of equity has increased. So even though, say, this person is 80 years of age, his children are managing the portfolio, he is also managing the portfolio, but children do all the execution and all. If it has to be done, buy this, sell that, check whether the dividends have come. So some of those things are outsourced to their chartered accountant's assistant or somebody like that. So they do keep investing, and because of the incremental investment going into equity, largely it would be something like 65-70% in equity, maybe 20% in debt, and 10% in gold. I'm not deliberately, I'm not including the residential real estate, but they would have 1 or 2 houses here and there, one in Lonavala or one in Khandala, something like that, the second house. I would put all that as fun assets. I will not bring that into play here. So, when I looked at some of the investments that these real rich have made, I realized that there is this, of course, there is this what we call the primary residence. There are some vehicles. Then there is the second residence, which is on the outskirts somewhere, maybe even in South India. But it will be there. There will be a second house. There will be some money given to one of the children to buy a house, so that children are very rarely borrow money to buy a house. So it would be just some portfolio liquidated, and if there have been 3 children and 3 houses have been bought, all the 3 houses would more or less be in the same locality, but yes, there would be 3 residences, or they could be living, they could have sold and bought a bigger residence. I recently met a friend who bought a 5 BHK. He and his 2 sons are living there. I mean, obviously he sons' families also. So that is how they react. So there is this primary residence. Then today vehicles are taking a big portion of their portfolio. Really big portion, in the sense that as a percentage it used to be much less earlier. So today 2-3 big cars costing about 80-90 lakhs, so say 1 crore each. So 3 crores goes away to cars, some 3-4 crores or 5 crores for the house, which they may have paid maybe only 80 lakhs, but it's worth 5 crores today. Or maybe they paid 1 crore, it's worth 6 crores today. So there is that primary residence which has gone up. The secondary residence, for which they may not have paid much, but they may, if they bought it recently, they would have paid 2 crores. If they bought it 10-20 years back, they would have paid 10 lakhs or 8 lakhs or something like that, which has appreciated in value. But today I'm talking about that price. Another valuation is their business. They have no clue how much their business is worth. So if I were to take a value of the business and put that also, then the percentage of equity in their portfolio comes down. But remember, the risk in their portfolio is high, because their own business is full equity. So if you take all that into account, then the outside equity may be only 40%. 30% would be the value of their their business, and then there would be some debt, ultra short bond fund kind of a thing, some cash, which is again a savings bank account or a bank FD kind of a thing, and this is how the composition would be. Then the outside equity comes down to 40%, but still all the incremental money going into equity helps the fact that equity will again go back from 30% to 70% given some more time, or when they sell their business, that's likely to become equity. So for the younger rich, for whom the wealth has been handed over by by generations, if I were to make their separate balance sheet, then primary residence could even be as high as 30-35% of their portfolio, because they're just starting out in life. Of course, this 35% is to be considered as a gift from the HUF to them, because they wouldn't have borrowed much for it, but they would have put some of their own money, which would have come out of their equity portfolio. So it's they find it very difficult to sell their equity portfolio to buy a residence, but they do buy it because they need, when the son gets married, he needs a house, or he at least needs 2 rooms. So they shift to a bigger house, but each of those rooms can be expensive depending on the location, unless you change your location, and most of these people will not change their location. So if you consider all of this, if you consider that their business has a value, they don't change the value of the business much every year. They say, oh, last year we thought it would fetch 35 crores, so I think I would stick to 35 crores valuation. So it has gone up, gone down, they really don't know. They largely value the real estate part of their business, or not so much of the cash flow. Let's say they are earning 50 lakhs a month, so they are earning about 6 crores. Do they value it at say 10 times purchase, which would be 60 crores? Answer is no. They would be very conservative. No, nobody is going to pay me that much for that property. No, my business is not too great. I don't, it's not so great that somebody else can't set up something like this. So the valuation is a bit iffy, unless when they sell. Recently, another person I know sold off his business, and he got something like 240 crores. Till he sold, he had no clue how much he would sell it for. Though of course he had some ballpark figure in his mind, but till he sold, he was not valuing it as part of his net worth. He was saying, oh, I have this much. He still had enough money, because many of them remove money from their business and put it into outside equity and outside debt, but they don't really know how to value their own business. So I really don't know in terms of percentage how the real rich invest, but among friends which I have seen who run their own business, they don't value their own business at all for their net worth calculation. They say, it's worth something, thoda bahut big jayega, real estate big jayega, but as a going concern, they rarely price it. So whatever answer you get from somewhere, they may be right, but they may be wrong, but they may not have valued all these things. Also, I think it's very important for us to realize, when we talk of millionaires, do they take risk? The answer is no, very rarely. On a 40 crore net worth, if they put 20 lakhs in crypto, I don't call that taking risk. It's an insignificant portion of their portfolio. So on a 40 crore portfolio, would that person go and put 4 crores in crypto? Answer is no. So with a person with say 2 crore net worth, should you put 20 lakhs in crypto? Answer is no. So if you are a person with 1 crore net worth, should you put 10 lakhs in crypto? The answer is no. As a percentage, if you are willing to put 1%, then on a 1 crore portfolio, it means 1 lakh. Right? If you also have to see that how much time does it take for you to earn that money. Suppose you are a person who is earning 2 lakhs a month. Okay, 2 lakhs a month, I'm assuming is gross. So I'm just cutting out 30% of that for tax, or say 1.5 lakhs net after all deduction. So if you lose 15 lakhs in the market, it means you have wasted 10 months effort. The question is, could you have returned it 10 months earlier? Could you have bought some other index fund which could have at least protected your downside? So the answer is that it's not just the amount of money, the amount of money translated into how many months or effort have you lost, or how many years effort have you lost. That is the question that you have to ask yourself. That is the question which many of these millionaires say, okay, I can put on a 40 crore net worth, I can put 10 lakhs, 20 lakhs. they are little loath to do very big deals because it scares them. Now see what the media says, that many of these guys have esoteric assets and all that. I really couldn't find much, but then I'm talking of not the super duper rich, right? I'm not talking of people with 4-5,000 crore, 10,000 crore kind of net worth. These are people with, say, maybe 200 crores of net worth, definitely not, or maybe 50 crores of net worth, maybe 30 crores of net worth. That is also super duper rich, but they are not in that 4,000 crore net worth. So none of these friends of mine have a yacht except one guy who has a yacht. Yes, they all have nice big cars, they have reasonably well furnished, well kept houses, but as a percentage, they're still 60-70% in equity. Thank you.